Greetings, everyone. Welcome to the webinar organized by Faculty of Economics and Administrative Sciences, Department of Management. Today, our guest speaker is Dr. Bilal Bağış, and he will talk about central bank digital currencies, CBDCs, monetary policy and financial efficiency. Before proceeding with his presentation, I would like to briefly present him. Dr. Bağış has a multidisciplinary Bachelor of Science degree from Istanbul Technical University in 2006, an Master of Arts degree in Economics from Sabancı University in 2009, and a PhD degree in Economics from the University of California in 2014. In addition to his academic career, he has had private sector experiences at various international and domestic companies and institutions. He has taught graduate and undergraduate level economics, math, and finance courses at prominent universities, including University of California, Berkeley, and Sabancı University. His analysis and working papers are published by various prominent institutions, including SETA and Strategic Research Center. And Dr. Bağış, the floor is yours.
Thank you. Thank you so much. Thanks for having me. And thanks for this opportunity. Let me share these slides first, and I'll try to outline the discussion of today. Okay. So thank you again, Serdar, and the faculty, Fatih Sultan Mehmet University, for this great opportunity. I'm really happy to be here. And as you just mentioned, my talk will be about monetary policy and financial efficiency in this new era of central bank digital currencies. So I'll talk about the recent trends, various research projects, pilot projects going on around the world. And hopefully with the comments, questions, and criticism from our other professors, I will try to actually build on this project. So I'll try to benefit from this discussion myself. More specifically, the talk today, it will be about how these new generation digital currencies, which we call central bank digital currencies, just to make sure we differentiate them between the earlier cryptocurrencies or the conventional electronic money or the commercial bank monies, because all of them, they are in a way digital currencies. So how do these central bank digital currencies, they affect financial efficiency, monetary policy, especially the domestic monetary policy, but of course the international aspects, they also matter, and how they improve efficiency of domestic and cross-border, cross-country, even cross-currency payment systems. So I'll try to go over things that we know about this new field, especially recent developments around the world. So the world is surely changing, as emphasized, reminded by great Tolkien and his Lord of the Rings trilogy. So if you look at the way transactions, financial systems, they run nowadays, the way we shop, our consumption behaviors, or the way we make payments, they have all transformed actually. And especially in e-commerce, in entertainment, in service sectors, and in particular the post-pandemic accelerated trends, they are tremendous. And the crypto and digital technologies, the blockchain technology, although the crypto technologies, they have existed since at least 1990s, blockchain technology is relatively newer. So it was introduced in 2008 with the Bitcoin paper, that white paper. And we also have a lot of fintechs, and they all actually show how the world of finances and economics, it has changed recently at, I would say, even at an unprecedented pace. So of course, given all these changes, the new financial technologies and the fact that almost all payments nowadays, they are online or they are made with digital wallets, and the demand for physical cash, it is declining all around the world. Let me actually give you a few numbers at this point, especially in Scandinavian economies. These cash usage, it is at historic low levels. In many developing economies, in countries like Estonia, and I will say even in emerging economies, developing economies like Turkey or Israel, again, these digital technologies, they have improved, and cash usage is actually declining. But in particular sector like the transportation sector, this change or transformation, it is much more clear. So this transformation and declining cash usage, it is of course increasing efficiency, decreasing the costs, it's increasing the easiness of usage, and also as we are familiar from the pandemic era, the hygiene concerns and the profitability concerns of companies, they have all led to this digital transformation and decline in use of cash. And in some countries, I mentioned the Scandinavian economies, in particular in Norway, for example, the cash usage is down to about 3% of all transactions. In Europe in general, data shows that in 7 years from 2014 to 2021, cash usage has declined by almost 1/3. And if you look at UK and US, again, the digital asset usage, we're talking about cryptocurrencies, stable coins, and other digital innovations. They are about 10 to 13% of all the transactions, and that usage, it has gone to over 10%. So these are all actually very good figures to understand this huge digitalization or transformation and decline in cash usage. And all these new payment systems, the apps, new cards, tokens, and fintechs, they're effectively used all around the world. So these transformation, these changes, they have, of course, affected central banking as well, the public institutions. And for central banks in particular, the past few decades of especially the crypto and blockchain technologies, transformation in financial services, technological advances, transformation in payment and finances, they have all increased interest in crypto technologies, digital technologies. And again, not just the digital transformation itself, but also the competition from new payment technologies in rival economies, in neighboring or big trade partners. It is also actually pushing many developing economies, many world economies, to come up with their own solutions, their own digital innovations. And the COVID pandemic, it surely accelerated the digital payment technologies. And if you look at the recent gold rush, especially among central banks, long after 1960 and 70s, we have nowadays another gold rush. And that also actually is in a way related to this trend of moving away from, for example, the dollar dominance, or moving away from reserve currencies. And for some countries, it is about sanctions and financial hegemony of the Western world. They are trying to run away from these Western sanctions. If you think about countries like Russia, even China, Iran, these new technologies, they matter a lot. And financial inclusion concerns for island economies, especially, or for developing economies such as India, Indonesia, where financial inclusion is an issue to contemplate nowadays. And also the financial stability concerns, as we have seen in early 2023, that bank runs in the US, and also the huge usage of cryptocurrencies, stable coins, all these new technologies, they actually have fastened and made these bank run cases much worse. And the huge price volatility is another thing. So these trends, they're also forcing central banks actually to rethink the new era of financial technologies. And this brings us to the future of money, actually. And we should understand how the future of money will look like. So money is certainly a public good, meaning it is not issued to make profit. It should be there for the benefit of public, for the well-being of the public. And the future digital currencies, just for this reason, they should also probably be provided by central banks again, because considering their central role, their experiences, expertise that they have so far in managing the conventional banknote ecosystems. So these experiences and that central role, it could be used to issue these new generation digital currencies, the public goods again. And the future of money, it seems like it will be these CBDCs that we're talking about. So, but what exactly are these CBDCs? They are future of money, they are future of the payment systems, but more specifically, they are regulated digital and electronic version of central bank money, the fiat currencies that we have faced post 1970s, post the Bretton Woods system. They are digital version of cash currencies, printed currencies, and they are used for domestic cross-border cross-currency payments, for international settlements, or for domestic and cross-border transfers. But another critical issue is, as pointed out by Georgieva, there's actually, in the meantime, no universally accepted approach to the CBDCs. That's another reality. And there is no one-size-fits-all solution to introduce this type of instruments, these new instruments. That's why actually we should spend more time thinking about how we should design these new issues, these new instruments. So CBDCs, they are central banks or sovereign nations' response to the rise of private currencies. It is something we understand from the discussion so far. And they are also a reaction of digital currency the reaction to digital currency technology and private sectors, fintech payment alternatives, because public institutions, in a way, they feel like they are losing control in financial system. And they also help central banks and governments keep up with the technological advances. And it is a way public institutions, especially the central banks, they are responding to these new era crypto technologies. And it's a mean to adapt to rising technologies and modernizing the financial system, or passing the payment system. So CBDCs are also about improving the payment technology and the digital transformation. Why this argument? well, if you look at the countries that have issued their CBDC so far, like Nigeria, the Bahamas, and the Caribbean Monetary Union, even those that are at an advanced pilot stage, like China and Russia, one particular thing that we observe is all these countries, they're developing economies, with the exception of Sweden. Sweden is also at a very advanced pilot stage. But in the meantime, all these economies, they also need huge improvements in their payment systems. So that basically tells us that CBDCs are pretty much about improving the payment systems, improving the financial efficiency in this new era of financial system. In the meantime, some other countries like Australia and Denmark, they are well known for their advanced payment systems. And if you look at their CBDC experiences, we see that they feel there is no urgency to issue any CBDC. And that's another proof that the state of the payment systems, it is one critical issue to contemplate within these discussions of CBDCs. And sometimes when especially developing or underdeveloped economies or countries with less trade share, they are moving with this CBDC technology, you might feel like it might not be a significant factor forcing countries to move to this new instrument, because trade and capital movements, they matter a lot. And if for trade purposes, for capital movement purposes, you need this new technology, it will actually might fasten this process much more. So that also means over time, as we observe more developed and emerging cases for CBDCs, for example, in US, there is a wholesale CBDC project going on. Once we have in Europe, in US, these advanced stages of CBDCs, other countries, they will feel like they have to follow the trend. They have to catch up with that technology. And other countries, they will also move to these digital currencies, because trade and capital movements, they're a significant factor. And in these cases, once we have this technology, you should observe that they will be providing cost advantage, speed, convenience, and transparency to payments. And these actually, they will also be the reasons for especially developed countries to move to this new instrument, to this new technology. So let's see the current picture of CBDC projects around the world. This is the Atlantic Council's CBDC tracker, and it shows that we have 11 launch projects around the world, including Nigeria, Bahamas, and Jamaica, the Caribbean Monetary Union, and a lot of countries, the greens, in especially Asia, including Turkey, China, Russia, India, even some advanced countries like Australia. They are at pilot stages. It doesn't mean they will come with CBDC for sure, but they will have almost completed their projects. But another critical thing is in especially the past 3 years, post-pandemic era, these projects, they have tripled. The Atlantic Council's reports, they demonstrate. And another good source to check for the current status of CBDCs around the world, the CDBC tracker. This is a project supported by Ernst Young, Boston Consulting Group, and a few others. They also show a more detailed status of CBDCs around the world. And we even have some canceled projects in some countries. There was not much demand for CBDCs, and these are countries that people don't have that high percentage of access to high technology or internet usage. And that's probably why we should consider, we'll talk about that later, the offline properties for CBDCs as well. And this figure, it also shows that Turkey is one of the countries at advanced stage of research at the proof of concept level, but other countries like India, China, they have already introduced their pilot projects. China in particular, they are doing very well, and they have reached hundreds of millions of people. So they are doing pretty well. And again, especially the Atlantic Council and the BIS data, it shows that almost 98% of global economy, which has actually tripled since the beginning of pandemic, they're working on their own CBDC digital currencies. And in terms of central banks, 93% of them, they are interested in CBDCs, and 50% of economies that we mentioned here, they're at advanced development stage. So they're almost ready to issue, but of course, the final decision, it may take time depending on the country. In G20 countries, 19 of them, they're at advanced development phase, excluding Argentina. So they haven't made that much progress. But except Argentina, many countries, they have actually made huge progress in these projects. How about Turkey? In Turkey, the digital Turkish lira or TL project, Turkey is planning to expand its pilot program this year in 2023. So Turkey has already built its digital Turkish lira network. This also tells us that our CBDC will be blockchain based. And Turkey also did actually the first transaction in December 29. But in addition to its digital TL project, Turkey is also actually making a lot of improvements in its complementing technologies, fast payment technologies like FAST and QR codes. This type of digitalizations, they also help build much advanced financial digitalization structure fundamental. But so we got a pretty good picture of the projects going on around the world, but we should understand actually the differences between this new generation central bank money and how it is different than the electronic money or digital monies that we currently have. The conventional electronic currencies or the money that we see in our mobile apps, bank accounts, they are liability of commercial banks. So they are backed by central bank currency that is kept at the bank cashiers or at their reserves. And there are electronic claims on commercial banks. So there are some simple bank deposits that are backed by central bank money. But these new generation CBDCs, they are directly issued by central banks. So they are digital claims on central banks, and they are central bank money. And they're also different than cryptocurrencies, which are usually mined, or if they are issued by a particular private issuer, it will be their liability. And they're also different than stable coins. Stable coins, they are pegged to one particular currency or a bundle, or sometimes an asset or commodity. But the CBDCs, as we see here, it is totally different, directly issued by central banks. And it is central banks that, just like the physical currency we had in the past. And again, to better picture how these CBDCs they're introduced, there are other features. So CBDCs are here. They are electronic currencies. They are universally accessible. They are liability of the central banks. And they have all these three general features, and they differ from reserves, cash, and conventional bank account and digital wallets or cryptocurrencies. Serdar Hocam, I think we'll get the questions to the end, right? So
it's up to you.
I don't have to wait to check if we have any questions so far. I'll just finish and then we'll get the question, right?
Yeah, okay, yes, we can proceed like that.
Okay. And again, this figure, it also tells the how they are different than the conventional electronic monies. So they are directly issued by central bank of the country, and they are not backed by any other physical currency as the previous conventional electronic currencies were. And is BIS money flower. It is relatively maybe more complicated, but better representation of how they differ. So they are widely accessible digital central bank issued and token-based currencies. So here we have central bank digital currencies in the middle. But in a few slides, I'll also differentiate between wholesale CBDCs and retail CBDCs. So the general purpose retail CBDCs, they are here. They are not, for example, token-based. And the wholesale CBDCs, they're here. They're missing just this widely accessible property. But the CBDCs, they have most of these properties underlined in this money flower of the Bank for International Settlement. And how do we use CBDCs? So this sophisticated technological instrument to facilitate payment and increase efficiency, where they're expected to create more effective and sovereign monetary policy. We'll go into details of what this feature means. They are expected to increase financial stability, enable efficiency in financial and commercial transactions. And most critically, they are expected to decrease the cost of transactions, and we'll talk about how the intermediation is eliminated and how security is increased. And again, by decreasing, for example, or even eliminating all of the intermediaries, how you increase the speed of transfers, international transfers, as well as the domestic ones. But they also, together with the blockchain technology, they could actually even enable direct peer-to-peer lending and borrowing. And in terms of monetary policy, they could maximize the seigniorage revenue by decreasing the cost of issuing currency, each individual currency. They have central banks adapt to digital technologies, and in a way, they will be increasing actually the monetary sovereignty and the central control or power of central banks. If you think about the current innovations such as cryptocurrencies, stable coins that we mentioned earlier, the huge cash usage in some countries, and the negatively affected money multiplier and financial accelerator mechanism a la Bernanke et al. Actually, these CBDCs, they could also be used to provide monetary stimulus packages more directly, which usually takes time, and the resulting impacts, they also they have a huge lag therefore, and welfare transfers monetary stimulus package, they will be much easier, and this will increase the monetary efficiency, of course. And they also enable inflation taxes, direct taxation. I think I will have time to talk about that later on again. And for some countries, for some sanctioned economies like Russia, Iran, and even countries like China that are willing to trade with these sanctioned economies, or that are willing to support their multinational companies' operations overseas. These CBDCs, they could actually be a good way to avoid sanctions, get rid of reserve currencies or the need for reserve currencies. And financial inclusion, we mentioned, especially how in island economies, in countries where unbanked populations or underbanked population share is very huge. This technology, it could actually be of great use. And financial stability, how new technologies have actually made these bank runs much worse, and the price volatilities of especially the cryptocurrencies, these assets, commodities. So introducing these new generation digital currencies, it could actually decrease these huge price volatilities and bring financial stability in the meantime. So how do we introduce them? This is probably the most critical aspect of this new technology. And we talked about how we don't actually have a universally accepted approach to introduce them. So each country's dynamics are different, and they will have their own case and rationale to explore CBDCs. And we'll also talk about how they actually, even in practice, they introduce these CBDCs in a different nature. For example, the retail CBDCs, which are also called universally accessible or general purpose CBDCs. So these are for the public, for households use, for consumers, depositors use. We also have the wholesale CBDCs. These are accessible to select financial institutions like the market makers. Actually, the current reserve system between central bank and commercial banks, it also resembles these wholesale CBDCs. For example, some countries are interested in second option. Countries like the US, they're more into wholesale CBDCs, and other countries in Europe, in the Eurozone, you could see an interest towards the first option. Many of the currently existing CBDCs, they are also retail CBDCs. Some countries like China, India, they have both of them actually. They're planning to have both of them. So therefore, depending on the country and the needs, the way we introduce them, it will also change. But in their nature, wholesale CBDCs, they're expected to facilitate and improve more the cross-country and cross-currency transactions. Whereas the retail CBDCs, on the other hand, they're more about domestic payment efficiency and financial inclusion. And that's why when we talked about island economies like Caribbean Monetary Union or Bahamas, they went with this retail CBDC option. On the other hand, in US, the Fed, they're making progress on wholesale CBDC. The European Central Bank, the Eurozone, they are more interested on retail CBDCs, and most likely it will be blockchain based. And earlier launched CBDC projects, the Bahamas, Jamaica, even Nigeria, they all had general purpose CBDCs. And so again, we said how we introduce them, it will matter. But will they be blockchain based or not? So use of blockchain technology is definitely not necessary because we have both options currently researched in countries like Sweden. They do use blockchain technology. Others like China, which are more concerned about having a more centrally controlled currency, they do not go with blockchain technology. So most CBDCs, they are built on this distributed ledger technology, the blockchain infrastructure, as we mentioned earlier. They are decentralized, but they could also be centralized, in which case CBDC transactions, they will be recorded in central bank ledgers. And we have a lot of currently existing examples. The first CBDC, the Bahamian dollar, which is blockchain based. We have a monetary union that issued its CBDC, the Caribbean Monetary Union. And even in Africa, Nigeria, they introduced their CBDC. China is an interesting case. They probably have the most advanced pilot tests, and they have already reached hundreds of millions of people, and they're applying this new technology to various fields. And in addition to the way we introduce them, the features, making sure that they increase efficiency is another critical issue we have to bear in mind. So CBDCs predominantly, they're about domestic financial efficiency, and also they need to improve cross-border, cross-currency transactions by decreasing the cost of transactions and also the time limits. We'll talk about online and offline features as well. So all these features, they will increase efficiency, and they are expected to enhance payment efficiency, financial inclusion, and improve payment technologies and digital currencies. And they need to decrease transaction costs and risks, and hence they need to have huge business efficiency. That is the expectation. And financial and payment-wise efficiency and safety, these are actually primary concerns in especially this new era of financial innovation, because we have a lot of private new initiatives, and the CBDCs, the public ones, they should have these additional safety and efficiency features. And the retail CBDCs for domestic use especially, they're expected to, they need to increase payment efficiency and financial inclusion. We mentioned the underbanked and unbanked populations. Around the world, actually, those figures are about 25% of the population. And even in very advanced economies like US, the unbanked population is about 4.5%, as I checked last time. So you need to have inclusion of these households as well. And the new financial infrastructure, it provides a new financial infrastructure to decrease payment-related risks, improving liquidity, and help deal with compliance issues, especially cross-country compliances. And the current digital currencies that are not issued by central bank, the crypto and stables, they also have the liquidity, illiquidity features that need to be dealt with. And this could be an additional feature of CBDCs. And a more efficient and secure base for new technological improvements and new applications. They could elaborate on reliability and speed of the transfers. They could bring back competition to the domestic payment system, which is actually weakening nowadays. And this competition in domestic financial markets, even in regional economies, for example, Europe is also actually complaining about this lack of competition and the fact that the financial payment technologies, they are actually mostly dominated by a few companies, sometimes monopolistic, sometimes oligopolist at the best case. So we need more competition, and the new infrastructure that will be built with the CBDCs, it could actually increase this competition. And by decreasing the huge entry cost, we're talking about the infrastructure that will be built here, they could rise that competition that is needed again. And the legal and legislative infrastructure, it could also be a huge plus that will come with the CBDCs. And it will help other fintech and digital technology companies also to be more innovative. And there is actually much more to talk about: efficiency and reliability, extended and limitless access to financial transactions, meaning having a 24/7 and even offline feature for the CBDCs. It could be a huge plus, increasing efficiency. Because in current conventional payment options, the wait times are usually very long, and we have a lot of intermediaries. Bringing down cost and the time that is spent there, this could be a huge plus for efficiency aspect. And better compliance issues regarding regulations in different countries, cybersecurity, privacy, and other critical things we should contemplate. Transparency of money flows and access to better data, I would say, is probably one of the most critical things, because everything will be recorded. So the accounting and data collection will be much easier. And competing with new technology, private alternatives, initiatives, it will be easier. And competition from the new technologies and also companies in other developing economies is another critical issue to contemplate within this CBDC technology. So you could extend these increasing efficiency aspects. If you look at, for example, the conventional transactions, you have a network of banks, and the transactions, they are usually slow, expensive, less transparent, and they are usually restricted to a few institutions, and the time limits are another issue. Long chains of waits, operations, they're taking huge amount of time, and just official times of operation, another restriction. So CBDCs, they will add to they will be solving these type of issues and creating a positive externality in this new era of financial technologies. And easiness and speed of public stimulus and money transfers, as I mentioned earlier, as they were implemented in, for example, post-2008, post-2020, the pandemic era, and how they actually did not work very well at that time. So you could actually improve these welfare transfers and monetary transfers using these improved digital technologies. And we talked about how CBDCs could also be used for sanctions and instead of the reserve currencies. The current or conventional reserve currencies, such as US dollar, they are actually increasingly used as a weapon. Think about these financial sanctions against countries such as Russia, and even US allies in Europe, including Turkey. So this is a huge issue nowadays. And BRICS economies, China's sharing global economy is also rising. They are sharing global economy, and also in trade, it is rising. So these are bringing the issue of new reserve currencies up. And the war in Ukraine, the tendency towards China, and move away from the West and the US. Growing multipolarization in all aspects, in payment systems, remittance transfers, financial transactions, an increased use of cryptocurrency for transactions and their volatile nature. So CBDCs, they just as the recent gold rush that we mentioned, they could actually be used more for domestic and cross-border transactions, and they could hence decrease dominance of these reserve currencies. But sometimes we even have this dollarization in domestic markets. These reserve currencies, when they are used more often in domestic transactions, as well as the cross-country international operations. And they are also, in addition to economic, financial, and political independence and resilience, they are also providing a less costly, more efficient, and much faster alternative. And in terms of monetary policy and central banking goals, well, as we know, central banks are usually primarily focused on price stability, financial stability, full employment, depending on the country. For some countries, one or more than one of these, they could be priority. In addition to these goals, enabling an efficient, reliable, secure, and inclusive payment system, that matters a lot. And these new technologies, they will make a huge difference in these areas. And monetary sovereignty for sovereign economies. If you think about all these existing cryptocurrencies, stable coins, huge amount of cash usage, and sometimes, policymakers, they will be complaining about decreasing money multiplier, or due to some financial frictions, amplifying or de-amplifying the effect of shocks. We're talking about this financial accelerator mechanism. So these issues, current issues, if CBDCs, they are designed in the right way and according to the mandates, they could actually help with the monetary policy as well. And using this new technology, new instrument, policymakers, they could actually increase monetary transmission mechanism again, which has to some extent weakened recently, and ensure more independent economic, financial, sovereign monetary policy, even to some extent political independence. But in the meantime, this new instrument and technology, it also leads to some extent, an absolute power concentration over money supply and the financial systems control by, for example, eliminating the private digital currencies. This is from a paper last year that I published. And central bank's central power within the financial system, it will be strengthened, and improved control and oversight over the financial system, and real access to real-time data about the economic activity, and also the changing, the shifting, altering preferences is another critical thing, and more efficient payment, price stability, financial stability, efficiency of monetary policy. These are our primary concerns, even in terms of monetary policy, and they could help in all these individual aspects. And if you want to go beyond that, you could also actually talk about enabling negative interest rates, well, which are a reality actually. In the past, we were talking about the zero lower bound, but thanks to the policies of post-2008, post-2020, we were able to observe negative interest rates, but we could go beyond that and even use them as taxes, and facilitating, speeding monetary stimuluses within the monetary policy. It will also be a critical issue, and expanding central banks' hegemony, monetary sovereignty. in financial system, and ensuring stable and sovereign payment and financial system. But the critical thing is considering your objective, your goals, and designing CBDCs in the right way. So what do you really want to do? From the classical point of view or the Keynesian point of view, do you want to go with fixed rules and automated responses, or do you want to go with discretionary monetary policy? You could ensure money supply increasing at a fixed and predetermined rate with these type of new financial innovations, the CBDCs. And they should definitely be designed according to the countries or the public institutions' mandates, and in such a way that they are used in most effective way. And more specifically, when we talk about designing CBDCs, what aspects would matter? Privacy, anonymity, accessibility, ensuring online and offline features, ensuring financial inclusion, and also deciding whether CBDCs, they will be interest-bearing or not. All these type of different features in the design stage, they should be contemplated very well. And for example, do you want to go with the one-tier structure to ensure that the issuer of CBDC also will be the distributor? Because we have such examples, the Eastern Caribbean Monetary Union, their CBDC. Or do you want to go with two-tier structure, just as the one in China? Between central bank and consumers, we have banks and other financial institutions. Or do you want to go with a new blockchain network of institutions that distributes CBDC? It seems like in Turkey and Turkey and ECB, the Eurozone, you could have this third option. So the way you design it, it matters a lot. And as I mentioned earlier, in the digital yuan case, CBDCs, they are distributed by private intermediaries. So this also ensures actually that you don't kill the banking system, the conventional banking system. Otherwise, if it's just central bank distributing those currencies directly to the final users, consumers, households, then what will be the role of banks in that financial system? And depending on the way you introduce them, a one-tier, two-tier, the structure will be a lot different. But most critically, I would say so we have a lot of positive features, positive externalities that could be created by CBDCs, but you have to be careful about privacy issues, cybersecurity, and anonymity for the bearer of those currencies, the international coordination and standardization to increase the benefits of these digital currencies, and potential future compliance and regulation issues. So the way you program these currencies, it will be critical here. CBDC design and foundations, they should also meet international and national regulations. And for example, the compliance with the anti-money laundering and combating financing of terrorism, this type of regulations, they do need huge international and national regulation compliances. And other pitfalls, other weaknesses, they should also be contemplated very well, because you will always have indebted individuals, elders, and children that may actually lack access to these currencies. And privacy issues and less anonymity in payments, the other technological hurdles, internet connection and energy cuts. And probably another critical feature we should not forget. So we should remember that the cryptocurrencies, for example, they have turned into new attractive assets. And if we are to introduce these CBDCs, the new generation digital currencies, they should also not turn into some other attractive asset. They should just be doing their function, just be a new generation money itself. Well, I think that's all for now, but I'll be happy to get the questions and go to the discussion section.
Thank you, Dr. Bağış, for this very interesting presentation about the CBDCs. So, our professors, if you have any questions, we can proceed like that.
Dr. Bağış, thank you very much for this beautiful presentation. Although it's not my discipline, I learned a lot when listening to you. Thank you very much. I completely agree that especially that COVID pandemic accelerated these digital payments. And I'm always curious about what kind of precautions can be taken to secure these payments made digitally, digital wallets or the other technologies. I'm very curious about it.
Well, that is actually one critical area we should spend more time and think about all these security aspects. Definitely is very, very critical. It is very important. And this is something central banks and the other players in that. Remember, we talked about the blockchain networks that are created in European Union or in Turkey, the digital Turkish lira network. This is probably what they're currently focusing on and trying to understand the pros and cons. So even if we have a relatively diverse nature of intermediaries that are acting between central bank and the individuals, we have to make sure the privacy issue, they're not violated, and you have some type of anonymity, and you don't share all your personal information, not just about your ID, but also about your preferences, because part of the transactions that we do, shopping, consumption behaviors, we might be preferring to keep them just for ourselves. So these type of privacy issues, they should definitely be contemplated. But in terms of what particular precautions they are thinking about or they need to come with, what that actually is very technical, and I'm not sure how they will come up, what type of precautions they will come with, but they have to definitely spend a lot of time thinking about those aspects, because in some countries, remember we talked about the American case, where they were actually researching both the retail option and also wholesale, but then they backed up from the retail option. Now they're more focusing on the wholesale. These digital currencies, they will just be used between the big corporations, big banks, and probably they will first observe, see the implication, the application of these new instruments. And once they're sure about the security aspect, once they're sure that the privacy is not violated, they will probably come up with the retail options also. And other countries like Australia, Denmark, where the existing payment systems, they're actually working very well. And for the moment, probably they're also, or at least some policymakers in those economies, they're concerned about these cybersecurity aspects and privacy issues, and they are not planning to be the first countries to move with that option. For other countries like China, it seems like that's not a priority, and they have decided to go with both options, retail and CBDCs, and they're trying both. And other countries, I would say they will probably wait these applications, these practical implementation or these pilot projects in countries like China, and then see the weaknesses and the pluses, and then come up with solutions to deal with those potential negative aspects. But it's hard to mention, particular precautions you could take.
Thank you very much, Dr. Bağış.
Thank you. Sure.
Thank you, Dr. Bağış. I guess we don't have any other questions. And I'm also checking the YouTube online live stream site, and we don't have questions as well. So if you would like, we can end the program in here.
Okay.
Thank you so much for your participation.
Sure.
Thank you so much for your participation and accepting our invitation, Dr. Bağış.
Thank you very much.
Well, the pleasure was all mine. Thank you for the invitation again, and hopefully we'll be able to meet